everybody. This is Jack with the Trading Tribe. Thanks for coming back today for another video here. We've got a really good one today, really important one too, especially if you're a beginner out there in trading. We're going to be covering trading candles and kind of how to read a candlestick chart and what a candlestick chart even is and how these candles are formed and based on the time frame, what the candle really means. So a lot of these charts you'll look kind of crazy, especially if you're just getting started here. So hopefully this brings some clarity kind of to what we're looking at and what the value is with candlesticks. So please like and subscribe to the channel, right, for a lot more of this. Hopefully this brings a lot of value and helps you and your trading as well. And today we're going to work in thinkorswim, which is my broker of choice. And we're going to mainly look at a futures contract, but this applies to the stock market and really all markets as well. Now that you can trade cryptocurrency and all sorts of stuff, right? This is really how all of that will work if you're looking at a candlestick chart in specific. And up here at the top, kind of in this top ribbon, if we go to our settings, we also have kind of the capability to change this. So in thinkorswim, right, we have a bunch of different chart types. We obviously don't need to have a candlestick chart. They have a bunch of different charts, right? So they have Hakanashis, they have line charts. A candlestick chart's just my favorite. That's really what we're going to be focusing on today. So make sure if you're in this platform as well, kind of testing with what we look at, make sure that you do select candlestick here. And what we're essentially doing is we're deciding how the data is shown on the chart. So no matter what market you're in, essentially, when the market is moving, right, the data is coming in through the exchange, right? And in this case, right, natural gas has been dropping today, and the data, right, will get printed on the chart. So we're looking at a 1 day, 1 minute chart right now. And if we zoom in real quick, we will, based on this next minute, right, have another candlestick. And that's essentially the data of that minute, right? Because we're on a time frame for a minute, and the current minute of time or whatever is essentially getting brought into the chart. So that's a really important thing to understand, right? Because a lot of charts are easier to look at kind of after the fact, but candles are essentially forming real time. So no matter what time frame you're on, that final candle that you see on the right hand side, as long as you have real time data turned on, is that true candle. So you'll notice that candle is actually moving, right? The price looks like it's going up because it's a green candle, and you'll notice we have kind of a wick that just got added to the candle, which shows us the high of price within the minute. And we can kind of talk about kind of the point of a candlestick chart. I'm going to look at yesterday actually, because they had some pretty big candles, and we're going to zoom in to some of that price action and kind of understand, right, what these given candles mean. So in trading, right, there's two types of candles. I can go back to the settings here. It gets a little bit confusing, but in that appearance section, we can also change a lot of the colors here. I am colorblind, so I have one filled in and one not, and that's kind of my cue. But you can have green and red and have everything filled in if you'd like. For me, I have these green candles that are essentially not filled in so that my eyes can tell that they're green. And then I have these red candles filled in, and that's kind of the cue for me that that's a red candle. But you can control really all of that. The good thing to know, right, is there's really three types of candles, right? There is a green candle, which essentially means in the trading time frame, the price went up, right? So if we're looking at a 1 day, 1 minute chart and we see a green candle, that essentially means in that minute that you're looking at, the price went up. That's essentially what the green signifies. And then the red is the exact opposite, right? So think of red as bad, right? On a stock chart, if you see a red candle, that essentially means the price went down in that trading interval. And essentially there's 4 pieces to each candle, right? So there is the high of the candle. So no matter what candle we're looking at here, the very tip of the candle is what we call the high. So within that minute, what's the highest the price was? Then there's the low. So the opposite, right? What's the lowest the price was in the minute? And then there is the open and the close, right? So there is the open, which would be the bottom of the triangle, and then there is the close, which would be the top of the triangle for a green candle. If we think about it, right, green signifies that the price went up. So essentially it's the low, open, close, high. So kind of a cool way to see within that minute, not only where did price go, but what's actually occurred there, right? Where did the price open up? Where did it close? Where's the highest it went, lowest it went? And just from one candle, you can get all four of kind of those data points. On the red side, it's kind of the opposite, right? So we still have the high and low, but if we think about it, red means that the price dropped in that minute in this case. So this is the open and this is the close. So for it to be a red candle, it has to close in that time frame lower, obviously, and that's why it would basically be flipped. So here's the open close, here is the open close. So based on the color, everything's essentially just reversed. And then we'll notice that we have these white candles as well, or these clear candles. These are what we call a doji. So essentially in the minute, right, there can still be a bunch of price manipulation, but at the end of the day, the price opens at a price and closes at a price within the minute. So technically this can happen as well. And you'll notice on charts, right, we actually have this occur. So we'll notice right here for natural gas on this day, we had a clear candle, which essentially shows you the high and low because there's still a bunch of price fluctuation. But at this point, right, price opened up at this level and it closed at that same level. So there's no, increase or decrease of price essentially. So there's really three types of candles, and that's kind of the explanation of the three. With that, that's obviously how we look at our trading. So when we're trading a different patterns and a different setup, right, we're looking for a lot of that as confirmation, right? So when price is coming up to an area where we expect a lot of sellers, for example, let's just say up here where we had kind of this triple top, we'll notice right when it came up to our area, there were big sellers coming in, right? These big red candles, right? Vice versa, right? So when we get down to an area where buyers were stepping in, we can tell that there were a lot of green candles coming into the chart, right? There was green stepping in for, a 30-minute stretch. And then again for a 30-minute stretch right around that same area. So hopefully this helps. This is something that's super important to trading, and over time you'll get more used to the different implications to candles, but understanding what a candlestick chart is and what it means is super, super important, and what data you can get out of this is also beneficial as well. So thanks everybody for joining. Hopefully this added a lot of value to you in your trading, and we will be back next time.